Welcome to my YouTube channel. In today's episode, let's try and find out why the government of India is going back and forth on implementing GST on fuel and how the implementation of GST on petrol and diesel is going to affect the common man in the long run. Now, it is a well known fact that petrol and diesel prices have crossed the 100 rupee mark. These sharp hikes have actually put a massive financial burden on the common man. There are reports, and several experts also state that the exclusion of fuel from GST's ambit is actually causing this kind of massive spike in fuel prices. Not just that, but states also implement VAT or value added tax on petrol and diesel, which is also responsible for this kind of a spike. Now, the result of this is obviously price variations for petrol and diesel in various states. If it comes under the GST regime, we can get a relief from higher rates and resolve this problem. This is what many experts believe because after that, once fuel comes under the government's GST ambit, the government of India can impose a fixed percentage, which is not more than 28% on the fuel. Also, this will make the prices of petrol and diesel uniform across the country. Now, going by what I said, it looks like it's a very simple solution where the government can bring petrol and diesel under the GST and make the prices uniform across the country. But it's not as simple as it seems. What are the challenges of bringing petrol and diesel under the GST ambit? First, goods and service tax, as we all know as GST, is an indirect tax that replaces taxes in India like state tax or VAT, central tax or excise duty, etc. But there are certain items that are not covered under the GST, such as petrol, diesel, alcohol, etc. These items contribute a remarkable amount of revenue to the center as well as states. So, a lot of revenue that the states and center gets is through these commodities. Let me give you a brief about what is VAT or value added tax as we call it. VAT is imposed by the state government on items to earn the state's revenue. Now, the problem is every state applies VAT as per its own requirements, and the people of that state have to pay it. For instance, Punjab imposes 33.4% tax on petrol, while that imposed on diesel is 19.77%. Approximately the VAT percentage in Chandigarh is 22.45% on petrol. Now, coming to Maharashtra, VAT on petrol is 26% plus rupees 10 per litre, whereas VAT on diesel is 24% plus rupees 3 per litre. And not just that, but Maharashtra earns an estimated income of 25,000 crore annually just through VAT on fuel commodities. So, given that this is a massive income for a state, bringing it under the GST will actually bring down states' incomes. This is one kind of argument. Let me give you an example of two contrasting states. Maharashtra has the highest VAT on petrol and hence earn the maximum from fuel selling, whereas Andaman Nicobar has the least VAT on petrol, which is 6%, and hence its revenue from petroleum products is much lesser. This is the situation of the states while they impose VAT on petroleum and petroleum products. The central government, on the other hand, imposes taxes on fuel or petroleum products, which is what brings them additional revenue. Now, here's the catch. If petrol or petroleum products are brought under the GST, then the tax on these products will be uniform, which also means that this brings down the revenue of the entire country as well as individual states. This is why the center is going back and forth on whether it wants to implement GST on petroleum products or not. Now, there is another catch here. The finance minister said that states and center would have to work together if GST on petroleum is implemented. Given the current climate of political situation in the country and the relations between central and the state governments, it is clear that it would not only cause differences, but it would also have a lot of conflict of interests between the state and center. Let's consider scenario 2. What if the government decides to bring petrol and diesel under the GST ambit? It will drastically reduce the prices of fuel across the country and make it uniform. Now, it sounds like a cool option, but here's what the catch from the government is. If GST on petrol and diesel is implemented by the government of India, then it could go ahead and apply the maximum percentage, which is 28% GST, to compensate for the revenue loss. Also, the government of India is planning to implement an additional cess on fuel prices, which means it could more or less be rupees 4 to 5 liter fall in the prices, but it could not be a huge variation from the current high prices on fuel. Even though the center has challenges in implementing GST on fuel, many states are in favor of it, except for those which earn high revenue on petroleum products. For instance, Maharashtra, the Telugu states, and even the center is in a dilemma whether it needs to implement or not, because the amount of revenue it earns from VAT on fuel is very high. While implementation of GST on fuel could bring a huge relief to the citizens of this country, on the other hand, it will bring down the tax collections of center and state in a massive way. Additionally, transport charges could also spike as a result of this. I'd like to give you an understanding on how much taxes on fuel do Indians pay. The basic price of oil is just rupees 26.34 per liter. The rest are, of course, taxes and excise duty. The total taxes on diesel in Delhi go up to 59%. Given that the government of India itself is in a dilemma whether to implement GST on petrol and diesel, or whether it has to balance this by reducing the financial burden on common man, what is the way out then? A plausible solution would be to find an alternative way of earning revenue. Can the government increase prices of essential commodities to balance it? Or again, will that increase financial burden on people? So, a better solution for all of this could be that the government can create an oil price stabilization fund. This fund can be used in tougher times when the country is ailing financially to compensate for the revenue loss by cross subsidizing funds saved from when the inflation was low in the country without hurting the common man. So, this kind of oil price stabilization fund will not just help the government of India in tougher times financially, but it will also help balance revenues and not bring them down completely. On the other hand, there's another solution suggested by economists, which is to have a graded and advanced subsidy for poor consumers, which can be lessened over a period of time. But this solution could also have political implications where welfare schemes could be retained, and this could never be faded out or lessened in any manner. Therefore, the first solution, where oil price stabilization fund, is a good solution and a long term alternative to deal with this kind of crisis when fuel prices are massively increasing and creating a financial burden on common man. Thank you for watching this video. If you liked it, please subscribe to my channel, and also if you think you could give suggestions on any topics of your choice, please leave them in the comment section.